I think we're mostly impressed by your brand awareness between the two of you. Well done, by the way. I'm very impressed. Seriously, taking my breath away. What are they saying? They're saying that it's exactly the conversation you're having about something like Tesla. That there are bulls and there are the bears. There are the bulls on IAG because it's going to come back one day, and there are the bulls on Tesla because it's going to win the EV market. So it's as binary as that in the equity space. It is a battle writ large between the growth and the value stocks. And your Unilevers, you've mentioned all three of the possible stocks you could highlight as the dreamboat of stability in Unilever, in the hope in Tesla, and in the other hope in IAG. I mean, it's well done, by the way, superbly teed up, because that's pretty much the conundrums that most managers are going through as we tread this COVID path.
Well, Peter, you've written a piece called Where Next for Markets? Echoes from the Past, and you draw the comparison with 2008 and 2000. Which are we in, and what does that imply for what happens over the next 18 months?
I think we're in both. I think 2000 was a switch from obviously an overt tech bubble into other stocks, followed by a recession 12 to 18 months later. We're actually in the middle of both. We've got an incredibly bullish IPO market, a red hot, the future is work at home stocks. And then you've got a recession really in the industrial and real economy sectors. So the glib answer, Jeff, is both. I mean, Steve highlighted that IAG is down 75% this year. It's simply stunning where these numbers are. And Tesla's up many-fold over, despite the fact it's on 700 times PE. And of course, EV sales in Europe are up 100% nearly this year. And Tesla's sales actually fell in Europe this year. So I can always pitch the other side of it, which is personally I'd buy IAG over Tesla. I can see airlines getting off the ground again, and I can see a lot of competitors to Tesla in the next 12 to 24 months in the EV space. So it's that balance that the managers are trying to work with, and a lot of sectors now fall into the virus trade casualties, as many as the banks, many industrials, an awful lot of the real economy sectors are in that space. So the index is heavily skewed towards a narrowing number of stocks, the inevitable COVID beneficiaries, but some of the pricing of those is getting, to say the least, giddy. So you've got the froth of 2000, but you've got the recession being baked in to the value part of the market as we speak, and certainly in some of the small mid caps, and certainly in most of the real economy stocks across the globe. That's not just a US phenomenon, that's everywhere.